What's going on, team? Welcome to my gold analysis. So we did a vote on the Instagram. If you'd be following me on Instagram at Strong Money Forex, you'll have seen on my stories. I asked what pairs did you want me to analyze for you this week, and we had a little vote, and the one that came out on top was gold. So that's what we're going to look at today, basically. So I'm going to talk you through my gold analysis. I don't personally trade gold. I don't really like how the lot sizes work. I get really confused with it. I know Euro USD. I know the lot sizes. I know based upon my how big my stop is, what my based upon how big my stop loss is, I know what lot size to take. That was a bit of a mouthful. So for me, I stick to what I know. Unless I see something really, really clear on gold, I might look at it. I probably won't. But the way I trade can be used on anything that has a chart. If what you're looking at has a chart with candlesticks on, the way that I trade, liquidity-based concepts, can be used on anything, and it's so universal for that reason. I'm trying to teach as many of you to trade for free. I personally don't feel that you should have to pay for trading education. I did. I paid hundreds of dollars, thousands of dollars potentially to be taught how to trade, and now what I want to do is try to give you guys something back for free so that you can learn how to trade. Trading is hard enough without you having to pay for it on top of that. Most people who want to get into trading because they want to make more money. So if you've got to pay to learn how to trade, it's kind of counterintuitive, isn't it? So my education is free. I'll teach everything that I trade and exactly how I trade. All I ask for you in return is that you subscribe to my channel. You support my social media. You help me grow. You help me get to new people. That's all I want from you guys. So if you're not doing this already, please make sure you're subscribed. Hit that subscribe button. And let's get into the video. Cheers. I was having a look at this earlier. As you can see, we've got a bit of analysis on this already. Really simply, we are kind of stuck a little bit. We've got a couple of liquidity points here. These are some major levels on the weekly chart. Let's mark them on. Let's just really kind of talk top down. I mean, these areas, they won't be tagged for weeks, but it kind of gives us a good idea of where we are. Ultimately, we are in bullish market conditions, and if you were to really kind of expand that, okay, this is kind of like a flag pattern, okay, which is a classic kind of bullish pattern. If you really were to look at that really finely, that is a bullish flag. And if we were to, sorry, 2 seconds, let's move that back. If we were to kind of zoom out of here, okay, as you can see, clearly gold since 1977 is bullish. I'm not going to fight with that just yet, but we have hit a bit of a range here since kind of 2020. We've been kind of up and down. Now we've recently had a rejection of this level. It didn't clear out liquidity, but we are pushing down, and we have just come into a level here which I think will be quite significant. You'll notice when price hits any of these levels, it has a good reaction. See here, tagged, reversed. See this one, came close, it reversed. See this one, it then broke through, took out some liquidity to the left, which would be here, tagged into this imbalance here. You can see that imbalance here. I mean, we're talking about weekly imbalances. These are massive, massive zones, but you can see it tagged in there. It took into this demand. Okay, I mean, this is in a higher time frame is my exact setup. That is resting liquidity, that little line there, that one there. We've then got an imbalance here, and then we've got a supply zone sat below. So that is a beautiful little setup, and if that was on the 1 minute chart, I'd be taking that all day long. So you can see that the way that I trade on the lower time frames, the way that I trade on the lower time frames repeats itself on the higher time frames as well, and that's why this is so universal. You can use it on anything. Now let's look at where price is currently. Okay, this week we've already started pushing away from this area, so you can kind of get an idea of how bullish price is. My only hesitation on bullish pricing is that we've had this push down, we failed to break a new high, we've had another push down, we've actually broken the lows, as you can see. So that range here, this entire range, this bit here, okay, that was broken. So this technically is a bearish breaker structure, but that didn't break any new highs. So if we're looking at the actual range of the marketplace, this is the range of the weekly, okay? So we are bullish, and we've tagged nearly into discount pricing, and then reversed. But ultimately, this is, although they're showing some bearish price action, so weaker highs, you know, an internal breaker structure, we are still bullish technically. And until price clears out this level here, which is that one, convincingly, okay, and then breaks down again, we are still bullish. As with gold, prices are likely to always be bullish. So, you know, it's a commodity. Ultimately, it's always going to appreciate in value gradually. That's just one thing to bear in mind. Doesn't mean we can't catch sells, but the buys, as you can see, buys impulsive, sells corrective, sells really corrective. This is all just messy, but then buys really impulsive. All the impulsive moves are buys. So for me, I'm not too fussed about anything just yet. Now, for me to want to buy from here, okay, I need to see some sort of liquidity being swept, and it doesn't look like it's taken out any liquidity. This is a supply zone here. This entire area here is a supply zone, so we can mark that on. We'll drag that across. So we've tagged just beneath this supply zone that you can see there. It's not really the best of supply zones because it itself didn't really take out any liquidity, but it is technically a supply zone. It took out some real kind of intermediate lows there. And this is, you know, somewhat protected because it is an area which broke that level to the left. So this is, you know, a protected low effectively. Push up, push down, protected low, because that low created the move that broke this structure to the left. So these are areas that, you know, when they are forming structure themselves, they are areas that you want to pay attention to, definitely. And as you can see, price has rejected it really, really well. So what would I be looking for right now? Well, I certainly wouldn't be looking for any buys, okay? I think that ultimately it's a waste of a trade. If you see this zone I've marked on the hourly time frame, okay, this one here, this range here, you can see push down, really, really corrective, and then a really impulsive move up. So it's clearly a bullish market. Now, I've marked on a daily level, which is this daily high here. I've marked on that daily level, and I'm expecting that to be swept. Would I sell from there? Maybe. It really depends on whether I get a setup. What I want to see is I want to see a push up, take that liquidity, a push down, false move, and then a manipulation setup. That I'd be happy to take short, but it's going to take hours to play out, so I've got plenty of time to get involved on that. Am I just going to sell from here where it is right now? Absolutely not. There's been no liquidity swept. That is quite a nice area. You can see that that took liquidity to the left. It's a really nice, I mean, that technically is an ISC candle. That technically is an institutional candle or an impulsive sweep candle, whatever you want to call it. That technically should be protected. But I just don't like where it is in the overall range. The overall range, as you can see on this chart, is here to here. Let's mark these on. The overall range is here to here. So for me, I'm just not that fussed. I'm not that fussed about, let's mark it on. Yeah, I'm not that fussed about selling from here. I mean, technically, it could be a sell because it is in the top half of the range. But you know how I trade. I want to be looking for really high probability trades. We've got up here as well, we have got an ISC, as you can see. That's a really clear institutional candle or an impulsive sweep candle, okay? So for me, that's a key area. So I'm not too interested in sells from here. What I would be interested in is if we did a really kind of corrective move down, something like that, I'd be more than happy to take a trade like that. Okay, so we've got a push down into these lows. We've taken out liquidity to the left. We've then got a false move, another test on liquidity, and then a manipulation setup. I'll be taking that all day long. Be more than happy to take that, and then I'd ride it all the way up to that protected candle. That could be a beautiful trade. Will I be selling down to that? Probably not, because I don't think it's a high probability trade. For me, I want to be trading in the extremes. I want to be trading in either premium pricing, which is this top 25% here. Okay, that is my premium pricing. I'm happy to trade in that all day long. In fact, if I'm ever going to consider a risk entry or B grade trade, what I call a B grade trade, I'm only ever going to be taking them from a premium pricing. Okay, so my A class trades I can pretty much take wherever. That's where I've got clear liquidity, I've got clear inducement, I've got my institutional candle, I've got my manipulation setup, I've got all my checklist met. That's my A grade trade. I'll take that pretty much anywhere. Okay, I'm obviously not going to take it in the lower of the range, but I would take an A grade trade here. Of course, I would take one here for a sell I'm talking about. Would I take one there? Absolutely not. because it's in the lower portion of a range. If it was from here, I mean, yeah, probably, because it has technically tagged into the upper half. It's not a great trade. I'd probably say it's a B grade, A grade trade, if that makes sense. It's like an AB trade maybe. But a B grade trade, I'm only ever going to take. That's a risk entry. That is like a, just a push up, a sweep, and then a push down and a retest. If I'm going to be taking a trade like that, it's got to be something that has, really clearly tells me that it's going to, immediately reverse, higher time frame, trend in line with the direction of the trade. All these other bits and bobs got to be lining up, and then I might take it like that. But I'm only ever going to take it from certain areas. If I was taking a buy and it was a B grade trade, I'd only ever take it from discount, okay, which is this bottom portion here, okay? That's the only area I'm going to be taking B grade trades from. One of the best things about trading is learning the technicalities and the nuances of a good trading structure and a good trading plan. And there was a time where I would just take a trade pretty much wherever. It didn't really matter. I would just literally take a trade if my setup appeared. Nowadays, my setup have criteria that have to be met. They have to be in certain market conditions. They have to be at certain times of the day. They have to be in certain portions of a range. They have to be either premium or they have to be discount. There are certain criteria now which will actively tell me not to take a trade. Even if the setup looks absolute gold and is absolutely perfect, sometimes the setup's there and I just don't take it. So being more selective as a trader is really, really important. I had a conversation with a few of the guys in my Discord group recently about this, about being more selective. And sometimes the best trade is just no trade at all. You might get a really perfect buy setup like this where you get a sweep of liquidity and then you get your manipulation setup and then a push up and you think, do you know what, that is literally perfect. But would I take it? Well, no. Why would I take it? This trade is ultimately limited by the range, so I might get 3R out of it, but what's the chances that it could just immediately reverse on me from here? Really, really high, because it's in premium pricing. This is where big players are going to be looking to take their sells and collect their sell orders. So, having a trade which both has high probability and high potential is really, really important. I did a webinar on this a little while ago. High potential trades are important. Just as important as high probability trades. We want a high probability that the trade will play out, but we also want a high potential that the trade has got enough room to run. Taking a sell from here, okay, with a nice tight entry is potentially going to get me in at 8-1. Taking a buy from here with a nice tight entry, well, it's ultimately limited by the range, so I'm probably only going to get 2 out of it if I'm lucky. So that's what I mean by high potential trades. They're really, really important. Anyway, we got a little bit off track. That's my gold analysis. For me, I'll be keeping an eye on this level. I will set a reminder on here, set an alert like that, ding. And I will also be keeping an eye if price gets into premium pricing. Other than that, I'm not really interested. I'm not even going to add it into my watch list. I'm going to see what happens over the next couple of days. And hope that was useful to some of you. As always, if you have any questions, put them in the comments below. Let me know if you'll use premium discount in your own trading. I personally think it's one of the best parts of my trading strategy, premium discount. If you don't use it, send me a message or put something in the comments below. Let me know and I'll be happy to talk you through how it works. And as always, thank you for tuning in and I'll catch you in the next video. Cheers.